What is good, guys? It's Rey-Jay back with another video, and in this one, I'm going to be talking about the SPY, the Nasdaq, the QQQs, and the futures. Break down what the charts are telling us and what you should be watching for tomorrow, and why tomorrow is going to be an absolutely massive data day because we have CPI coming out. So I'm going to break down how this may affect different stocks out there, how this may affect the markets, and why you should be very, very cautious on a day like this. Now, before I break anything down about this, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last thing is, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed 7 free stocks, and 5 out of those 7 free stocks could be a free Tesla share, a free NEO share, or a mix of all of them. It's a limited time offer. The offer ends in just 2 weeks. Check it out before they run out. With that out of the way, let's get on with the video. So anyways, when it comes to SPY, this thing ended up actually closing just slightly in the red, very flat. My prediction from yesterday was the market would try to rebound a bit. We did see Tesla close green, so did Apple and many other stocks out there. We saw Nasdaq actually close kind of green with the QQQ. So we did actually see a slight rebound from the tech side, but overall SPY did not keep up. It actually closed just slightly in the red. Now, what happened today? Well, in the beginning, the market did end up gapping down after there was like talk and more stress involving the banks that came out as another bank has just collapsed. But the market got bought up, the algo started buying, and we actually saw a very nice rally to the 390 resistance. I mentioned to you all that this 388 to 390 level is very important on SPY. We have major resistance right here. And as we touched this supply zone, we saw the market slow down. It actually failed to break it. Then we got a bit of a sell off to end the day. This is because of profit taking, hedging, and many other factors coming in before CPI. Now, if the market is going to continue to rally, this is going to depend heavily on CPI. And if the market ends up crashing, that's also going to play a very, very big role. I'm going to explain exactly why. We're seeing many regulators out there that are seizing Signature Bank, which is the third largest bank in America that's also failing due to not properly allocating their risks. This is telling me that, look, as more people start withdrawing money, the banks are having a hard time keeping up with it, and the banks were lending out this money into risky assets and not doing a good job at mitigating the risks. They're now buying into these bonds. They're buying all these bonds, these treasuries, which are losing these values, not to mention mortgage backed securities. What's happening to all the money? It's just being lost at such a fast rate. And on top of that, they were invested heavily into these tech startups. What's happening to all the money? They're struggling right now, especially because of the rate hikes, and they were not properly hedged. So now other banks are going through the same thing as Silicon Valley Bank, or at least some very similar things. And initially, Janet Yellen was saying that the government won't bail them out. They don't want any taxpayers to get hit by it. But going back a couple of hours, forward a couple of hours, the US government is stepping in and they're actually going to help out with the situation, basically. Is it going to be a perfect situation right now? The answer is not necessarily, because of the fact that the FDIC is going to make up the differences for the amount of people that the depositors put in, but they're not going to actually be able to help in every single way, shape, or form. That's why the US government is starting to step in. On top of that, they are taking some decisive actions, at least that's what they call it, but they're also trying to call in some regulators that are going to help find another buyer for Silicon Valley Bank. So there's a lot going on at the same time, but for the most part, this is like a bailout. They're just not using the same language. It still is like it, and they're trying to actually help out with the situation. Now, the problem with this is the Fed's policies are not in line with helping the banks. Why is that? Because the Fed is still tightening, the Fed is still raising interest rates. When you raise rates, you are hurting not just Americans, not just different sectors, but almost every sector, almost every single one. We're seeing banks taking hits, the economy contracting, we're seeing this hurting tech in a way, and the list goes on. So now as banks are getting hit, Goldman Sachs is coming out and saying they want a pause. Now, is the Fed going to pause? As of right now, at the time I'm recording this, the answer is it's very unlikely. I think inflation is still very hot, but we need to see inflation tomorrow to get a better understanding. If inflation is very low tomorrow, if they somehow change the numbers and find a way to make it low, this could like fuel a new narrative that the Fed is going to pause, the Fed is going to slow down, and that can help the market rally, right? This also aligns with quadruple witching. But if CPI is hot, say goodbye to a Fed pause. They're not pausing anytime soon. And there's going to be more pain, lots of pain. That's why this next CPI is going to be massive. Expectation is 5.5% for core CPI and 6% for overall CPI. I have the numbers right about here. Anything lower is going to be pretty good or okay. Anything higher is going to be pretty bad for core CPI. I'm thinking it's going to be very, very close to expectations. Very, very close. Maybe even a little bit lower, but super, super close for core. But I'm thinking that the overall CPI is going to be a little hot. The expectation is about 6%. I'm thinking that it's going to be a little bit above that because we did see energy increase just a bit, and there could be other factors as well. And we did see a big increase in credit card debt and also spending. So this could actually drag up inflation. Maybe core is going to be okay, but overall, I think it's going to be a little hot for overall, with even core being just pretty flat. Now, for the timing, it's going to be coming out an hour before the market opens tomorrow. So please be ready. It's going to affect the market big time. What do I believe is going to happen? I don't really know, to be honest. I don't know if they're going to manipulate the numbers and make them very low. I don't know if the numbers are going to be hot. I just can't predict it. The best thing to do is, and this is not financial advice, but it's to mitigate risks and manage them. All right? When you manage risks, you have to be ready for anything. If CPI is lower than expected for both core and the overall number, there's going to be a lot of talk about the Fed pausing, and the market could actually rip. The bullish possibility is going to be, first off, we have to get above this 389 zone, this 389 to 390 zone. Break above that, the next major resistance is going to be 393. Break 393, and this thing is going to fly all the way up to retest the resistance line around this like 395, 396 zone. Break above that, then we could get to this 400 to 401 area. This is almost looking like an inverse head and shoulders. It is a possibility, but TA is not everything. And TA itself is not going to give you all the answers. But that's the more bullish possibility. If you're bearish, the bearish possibility of CPI is too hot, expect SPY to come all the way down to 380 and break below that and slowly get down to 375. On the hourly, this is what it's going to look like. A new low to be made. Actually, let me use the daily when doing this. We're going to likely come all the way down here to retest this chop zone. 375 if CPI is hot. We could even break lower. I also want to note that on the weekly, we have the 200 EMA for the weekly chart around 364. If we break that, if we break below 364, we're going to crash most likely to new lows. It's very, very likely. That's a very important level. For Tesla, this thing closed a little bit in the green, very close to 175. I believe Tesla, of all things, is going to make a big move depending on the data. If CPI is too hot, you have to watch this 166 zone. If that fails, it could come all the way down. I don't think 163 would even hold. It could come all the way down to 160 or even lower than that. If CPI is better than expected, Tesla could fly all the way above 178 and keep going and get very close to where the weekly 200 EMA happens to be, into the 180s. 180 to 185 is very possible if we get a good report. NEO, and what's funny about NEO is it actually has a bullish divergence forming. NEO could actually keep going and try to get back above $9. I think it also has an inverse head and shoulders It's a real possibility. Uh, that's what I would see if we get a good CPI. If it's bad, expect a break below $8 if it's a really bad report. For Apple, if we're bullish, I'm going to be watching to see if Apple could break above 152.5. Break above that, and this thing's going to fly for about 154.5. And then we have 157.5. If we're bearish on Apple, expect it to retest where the 200 EMA is around 147, followed by 145, then 140.75 if that ends up failing. All right, depends on the data, depends on CPI. For Google, if we're bullish, this thing could go all the way up to 95 to 96.3. If we're bearish, watch 88. If that fails, it could come all the way down to this 83 level, maybe even lower than that. It could just continue to drop to 83 or even lower if 85 doesn't hold. For the Russell 2000, sorry. If we're bullish, watch 176.5. If that breaks, 181 is possible. If you're bearish, watch 170. It's a very important zone. If that fails, 170 fails, there's not much support to hold us around this 166 zone. The next major support is going to be on 161. So this is a very important level. If 170 fails, 161 could come pretty fast. That's why it has to hold on the IWM or else this thing is going to come down. For Meta, if Meta wants to keep going, I believe Meta has the potential to break all the way up to 190 for bullish. If we're bearish, and this candle looks pretty indecisive right now, if we're bearish, you have to watch 177 followed by 171 if that ends up failing. All right, so those are some very important levels. For the triple Q, we have 190. If 190, not 190, 290, sorry about that, guys. If we break up, I'm going to be watching the daily 200 EMA. We have 295 right over there. It could retest this and try to break above that if we're super bullish. If CPI pushes the market hard. Break 295, I'm going to be watching 300. And if that breaks, don't forget about 304. If we break below 290, I'm going to be watching 285. And if that fails, watch 281.45, followed by the 280 flat zone is going to be important. And then the next major support is going to be around this 270 to 273 zone if we break below like 280. So it has a lot of room if we do end up dropping below 280. But besides that, it's pretty indecisive right now. We just have to wait for the data. NVIDIA, I'm seeing this thing potentially, if it does bounce, if the market's bullish, 230, 236, then 240 could all come. If we're bearish, if the market crashes tomorrow, this thing could just continue to fall and just slowly get closer and closer to filling the gap all the way down to the low 200s. That's basically what this thing could be doing. It's on a bit of a downtrend too. What I could do is take this support zone, draw a fib retracement. Did this work? Wait, hold on. I think I pressed the wrong thing. Sorry about that. So for my Fibonacci retracement, if it breaks, the 0.618 retracement happens to be around this 219 level. That's important. 219, if it does break down very hard, don't forget that level. The dollar is also slowing down a bit. Once again, as the banks are not doing well, dollar is continuing to actually decrease in value. The next important level is going to be 102.6 if it does continue to drop. If the dollar tries to get a bounce, I don't know what's going to trigger it, but if something like that happens, if the dollar does bounce, this could actually cause an opposite reaction. But because the dollar is just in such a strong downtrend, it's actually dropping with the market because of the banks collapsing. It really depends on the reasoning. If the banks continue to collapse like tomorrow and etc., the dollar could actually drop with the market as we've continued to do. But typically, this is not what happens. And if we do get a good CPI rating, the dollar could actually decrease again if the Fed is going to, because of the narrative of the Fed not tightening on financial conditions, which could actually bring the dollar down to 102. For the VIX, we actually hit 30, which is pretty cool. Looks to me like I mean, the VIX is very close to overbought territory. I don't really know how this is going to play out exactly. If the market comes down more, the VIX could hit 30 again, or the VIX could end up coming down. From a technical standpoint, this looks like the VIX is overbought and this thing is set for some downside because it is still up pretty big and we are forming a divergence relative to the market. So, in my opinion, it's looking a little bit more like the VIX is going to come down and the market might rally tomorrow. I just don't know for sure. However, I can't promise anything, but it is a real possibility. And that's what I wanted to talk about in the video. I want to just keep it nice, short, sweet, and simple. 10-year Treasury yield starting to actually decrease. The yields are coming down too. If this thing gets a balance, tries to fill one of these gaps, that would be bearish for the markets. So far, it's continuing to come down to a major support zone around the 33 level. So we'll just have to wait and see how that holds first. But until then, it's very indecisive. Look at the candle today, very indecisive. It doesn't know what it's going to do. We're just waiting for CPI. So get ready for tomorrow, big day. Remain calm, cool, and collected, and I'll see you guys in the next one. The market to the moon because the long-term future is still incredibly bright. And peace out.